But, you know,
It's got a
Bitcoin,
mouth to feed.
Bitcoin, GameStop, and now buy now, pay later. Millennials are certainly diving into the world of investing and making pretty big waves about it. That's why Maqro Investment Group is building an app for them. And to tell us all about it, we're joined in studio by Conrad Song. Hi, Conrad.
Hi, thanks for having me.
Welcome back. Great to have you on the show again. So tell us a little bit about this plan. What is it going to mean for Maqro customers?
Big plan, I guess in line with the context you've just set up. So the millennial market is, it's interesting. So what it is that we do is we're a startup, but we're not a startup. So we have, as a financial advisory firm, fairly established revenue streams. You know, we've started sort of 5 years ago. Since then, we've got brokerage revenue, we've got sales revenue, and also recently we've managed to list a company on the ASX as lead broker. And so it's like, okay, we've got all this stuff as an established business, but the flagship product is highly focused on this new trend of millennials. It's always been our focus, it's always been our strategy, and it couldn't have come at a better time, I suppose, with all of this catastrophe in COVID, where we saw all this retail money, dive into the market. GameStop and all of that obviously adds to it. Bitcoin has obviously been a benefiting factor. But the idea is that what we do is provide executable research and recommendations to the investor, to the millennial market, that might not be, let's say, at the moment it's pretty interesting. Everyone thinks they're really, they're Warren Buffett at this stage, right? And it takes some time before investors realize that they're sort of really, out of their depth with this kind of thing, right? When that happens, these products that have so far facilitated the growth, whether it's self-directed trading, right? So on the one spectrum, it's don't pay any brokerage or pay a little bit of brokerage, do it all yourself. Or, hey, just put it into an ETF and get some tech exposure. And it's going to take, a couple of moves on the downside, and we're already starting to see it. I'm not just saying that based on my hunch. We're seeing the data since we started 5 years ago that these people need help, and they're not going to get help from the traditional advisory firms. The big firms out there are not going to look at millennial clients with 10 to 50 grand in a trading account and look to give them advice. It's just not worth their time. So that's where we're sort of playing with that app. And we're about to launch that soon, so we're pretty excited, yeah.
So tell us a bit, I guess, how that works. And so, as you do say, on the one hand, you do have the superheroes, which is small brokerage.
Yeah.
On the other hand, you've got the pocketbooks, which is just ETFs.
Yeah.
Will people just be paying you for advice, or is it just a case of here's all the content, make an informed decision? What sort of...
Yeah, so again,
it's getting?
Yeah, and I guess let's try to restrict it to just the flagship product. But it's interesting you mentioned superheroes. The superheroes is a fantastic example of that self-directed sort of wave. They actually sit on the same AFSL that we do, which is Sanlam Private Wealth. So Sanlam, they support companies like Stake and StockSpot, which again, they're in that sort of spectrum of self-directed or just completely give it to us and we'll take care of it for you. People think that advice is dying, right? And it's come from this really disappointment, and there's movies about it now, right? And they're blockbusters, but there's conflicted remuneration. Brokers don't act in the best interest of their clients, so the advisors are just giving crappy advice. And so people are saying, okay, well, I'll do it myself, or I'll just do it in this really passive way. So the form in which the app sort of works is that we give very concise, actionable recommendations through the mobile app. It's notification. At the moment, it's all online at the moment through a desktop platform. So we already have the infrastructure. We've been testing it out, just not through an app. So we've been using sort of more manual sort of ways to communicate, let's say SMS notifications, say, hey, do you like this recommendation? If so, respond yes, and we'll execute the trade for you. So that second component is the actual execution part. Now, what we've managed to do is, so Superhero, just to sort of give you an understanding of what it is that they actually do, they've built their front end and they get powered by a company called Open Markets. So the APIs they're using to trade is all through a company called Open Markets, which is something that we've been using from the very, for a long time now. We've recently launched a white labeled trading platform using Open Markets. And so the execution component is something that our clients are very used to, and we've got a lot of data on that. The idea is that we package this into an app, we send out a simple notification, very concise way to say, hey, this is why we like the stock. And in terms of the research, it's just sort of take one step back. It's not just like, oh, here's a bunch of data, and we sort of manipulate that and make it look pretty. There's companies that do that, and sure, that's fine. We've got internal research analysts, which we've developed over the last 5 years. Recently, we onboarded a gentleman called Mark Gardiner, who was the ex-chairman of Genesis Prop Trading, which is a pretty prominent prop trading firm here in Sydney. And so we've managed to sort of build a really good internal sort of research division to provide sort of high quality advice, also using the data from Refinitiv and all these institutional data points. But combine that all and say, okay, hey, here's a recommendation. This is why we like it. If you do, press this button. It's really simple. And we execute the trade through the open markets platform. So that's kind of the gist of it, yeah.
Okay, so I want to run a little bit of a devil's advocate here.
Yep.
So, do I like this trade? Yes, press the button. Am I going to get a message somewhere down the track where you sort of say, look, probably time to get out of this one? Are you going to deal with the other side of the equation where it's like, we think this is now overvalued, you need to move on? Great
question, right? So one of the biggest problems in the traditional advisory model is that a broker will give you a call when to buy. They'll say, hey, this is a great idea. But the second that stock tanks, you won't hear from them for a long time, let alone get any advice on that trade, right? That's one of the big problems that happens in the industry. And it's because the broker has enough clients he can move to. He goes, okay, well, this one I've done poorly on, so I'll move to the next guy, right? So what we've managed to do, and it's all on the online platform, we've already tested this out, it's dynamic advice. So not only will we provide a buy range, a stop loss, and a price target, but we'll update that live. And we don't have to do that over a phone call. Now, we have an additional add-on product or service where you get access to a real person, an advisor, gives you a call and says, hey, look, this is what's happening. And one of the big sort of principles that we implement is that, hey, give them a call when the stock goes wrong. However, using technology, and this is really the key here, what we've been able to do is update the recommendations live, unlike a newsletter service, which there are a lot of out there that give you stock tips, they give you a buy, and it's kind of static in nature. Yep. But the markets aren't static. Things change every day, right? And so what we do is we provide sort of ongoing commentary and we provide ongoing sort of support on the trade parameters itself. And sometimes this happens twice a day. And it's like, okay, you guys are flipping and changing, but it's like, no, well, it's because the market is changing and we need to adapt to that. So again, it's something that we've actually tried and tested through the online platform that exists today. It's just, and that makes it look pretty and it's easier, right?
Now, you've been busy and you've got to pay for that. So
of course, yeah.
next month, I think you're tapping the market. You're going to look for about $2 million on the equitized platform. Tell us a little bit about that raise and your plans for that.
Yeah, the good thing is we're post-revenue, right? So a lot of the stuff that we need to pay for pays for itself with the business that we've established, right? That being said, if we want to target the IPO, which is really our plans, with the space being hot right now, I mean, look, the valuations are a little scary, I think, in the fintech space. So we've sort of tried to be as conservative as we can in these upcoming raises to attract the right investors who understand the market. But we've partnered with a company called Equitize. Now, they're predominantly focused on crowdsourced funding. What they do is they sort of allow retail investors to gain access to sort of seed and pre-IPO transactions and sort of level the playing field, which was usually historically only available for VCs and private equity firms, right? But we've managed to partner up with them, not for the crowdsourced funding raise, which we may explore, and that is in the plans. However, it's a wholesale raise, so it's through an SPV, a special purpose vehicle, and we'll be looking to raise $2 million. And the idea is that we've been stealth. Right? Besides me jumping on AusbizTV here with Koshi and on the call, where we've really only been promoting the advice. What we want to establish to the market is that our advice and the quality of our recommendations is high, and I think we've done that through the track record that we've established for our clients and even through channels like this. But the idea is that no one knows who we are, really, right? And the reason why no one knows who we are is because we haven't done any marketing. So we've built a business and we've been generating revenue. We've listed a company. We've done a lot of great things in terms of growth metrics, and we haven't spent much money on marketing at all. And so what we're going to do is we're going to spend about $2 million on product dev, just finalizing the launch of the mobile app, which we're really excited about. It's going to really lower the barrier to entry for people to work with us, and that's a big thing. And the idea is that if we can take on a lot of investors and a lot of clients with the easy, lower barrier to entry, well, we might as well have the conversion for it. And the interesting thing about marketing these days is that, sure, you've got brand awareness, sure, you've got really good strategies, which we're looking into. But marketing, you're effectively buying or acquiring acquiring clients. It's a conversion rate. With the digital marketing sphere at the moment, it's pretty easy for us to forecast what the growth is going to be. And so for the last sort of 2 years, we've been sort of optimizing the business infrastructure to allow the capacity to actually take on that growth. So, yeah.
Well, good luck with the raise,
Thank
Conrad.
you.
Thank you for joining us to talk us all about it, and we'll have to get you back once the raise is complete.
Sounds good. Thanks for having me.
Thank you.